Why was the Energy Profits Levy introduced, and what are its main features?
The oil and gas industry has been providing oil and gas to the UK for 50 years now. Over that time, it has funded the wheels of change, funded the economy, provide heating, provide electricity for people, and has contributed around £500 billion to the economy. In May 2022, the government put in place the Energy Profits Levy, or introduced the Energy Profits Levy. The reason for this was to react to the high gas prices and commodity prices at the time, caused about the invasion of Ukraine by Russia. Now, the EPL in its original format was a 25% levy. It was going to be temporary and only last until 2025, and it contained an investment allowance to incentivise companies to continue investing through the cycle. Lo and behold, a couple of years later, in 2025, the EPL has been changed 4 times over that period to 38% in its current state. The investment incentives have been withdrawn, and the EPL has been extended now until March 2030, so the end of the next Parliament. What this means is that the tax rate in the UK has gone from 40% in 2021 to 78% in its current state. So it's nearly doubled in the space of 2.5 years. And all this makes the investment climate very uncertain for oil and gas companies. A price mechanism was put in place so that the Energy Profits Levy falls away if oil and gas prices fall below certain levels. Now, with the recent volatility in the oil price has actually fallen beneath this level, but the gas price remains slightly above. Unfortunately, for Energy Profits Levy to be removed and to disappear, both oil and gas prices have to be below this threshold. Now, that means that if you're an oil producer, at the moment you're getting a double whammy of low oil prices, but also you're being exposed to the Energy Profits Levy at the same time. Despite oil and gas prices falling to pre-war levels, the temporary Energy Profits Levy still remains.
What has been the impact of EPL on production? Why is this important for energy security and emissions?
To give some context, the UK used to be energy independent. So back in the early 2000s, the UK used to produce enough oil and gas to satisfy its own needs and actually export oil and gas. Now, since then, we've gone from a net exporter to a net importer, and as a result, this has had a big impact on both domestic prices, but also has a big impact on production, as you mentioned. Now, production has fallen from a high of over 100 billion cubic metres back in 2000 in terms of gas, to last year where it was around 26 billion cubic metres. Now, the forecast is that this gas production will continue to fall away over the next couple of years and will fall to 13 billion cubic metres by 2030 and then half again by 2035. Now, the impact of this is that we're more reliant on imports to meet our energy demand. Wood Mackenzie, the energy analytics specialist, have said that as a result of the introduction of the Energy Profits Levy, production is around 10% lower than they forecast for 2025 than back in 2021 before the Energy Profits Levy. The North Sea Transition Authority publishes every 6 months a prediction of what production looks like for the period of 2025 to 2030. As a result of the EPL, these numbers that the NST has put in place have dropped significantly over the past couple of years.
How does UK reliance on imports tie into record high energy bills for households and businesses?
So the impact of declining production, as I mentioned, results in higher imports into the UK. And this leaves the UK exposed to international energy prices, both oil and gas prices, but also leaves us exposed to volatility as well, as we're seeing at the moment with markets and oil prices and gas prices. What this means is that the UK has to import more oil and gas. In 2022, these imports totaled £137 billion. And to put that in context, that's twice the defence budget for the UK and is around £4,500 for every household in the UK. When it comes to things like the price cap in the UK, so the price cap that's put in place for gas prices in particular, what we see, or what we found out, is that the energy companies that regulate the cap, if they set it too low, there is a risk that these companies could walk away. And the problem there is that if the companies walk away, then there's going to be less competition, there's the potential that prices could go up, and there's a potential that the cap could be removed altogether. And what that means is that individuals, residents, industry are all going to be exposed to international price fluctuations, of which the UK has no control over. And obviously the energy prices depend on supply, demand, political movements, etc. So it leaves the UK more exposed to potential international events.
Why should the average person care about what happens in the North Sea?
So as I mentioned earlier, the big issue is that the less we produce, the more we have to import. The fact that we don't produce domestically doesn't mean that there isn't demand for it. And that means that we'll have to import the oil and gas from somewhere, and again be exposed to international energy markets and international energy prices. In the North Sea, production, as I mentioned, is falling off very quickly at the moment, and we are becoming more and more reliant on overseas oil and gas. This has obviously come to fruition in other places around the world, for instance Europe and its dependence on Russian gas back in 2022. The other issue with this is that with us having to import oil and gas from overseas, there is a higher emissions profile associated with this production. So rather than producing it domestically, and for instance UK gas production, the emissions intensity of that production is around 21 kilograms of CO2 per BOE. Importing it from elsewhere can be up to 4 times more emissions intensive than it is in producing domestically. And that's because the gas has to be liquefied, has to be processed, has to be transported and imported into the UK. So for instance, UK is around 21 kilograms of CO2 per BOE. In the US, importing gas from the US and LNG, that's around 79 kilograms of CO2 per BOE. So there's a big difference between producing it domestically, an emissions profile, and importing it internationally. And whilst we may be reducing our emissions domestically, we are offshoring those emissions and, I suppose, increasing emissions globally as a result. One way to navigate the volatility in energy prices is via gas storage. So this is importing gas during the summer months when gas prices are lower, and then releasing that gas into the system during the winter months when demand is higher. So the UK has much less storage than other European countries, just 7 days at peak winter demand compared to over 100 days for Germany, France and the Netherlands. This lack of storage and strained electricity capacity came to fore in January, where the UK actually came close to some blackouts, and the national grid had to actually publish some warnings on use. Now, as the UK production starts to decline and we rely more and more on imports, the threat of blackouts becomes more and more real.